Hey everybody, morning. Ivan, Logan, Dan, Don, Rob, Jerry, Sergio, Will, Mary, Donald, Gaten, Diane, Scott. Good to see everybody. Salah, I love it. That's funny. um, how's it going? On May 23rd, 2025, President Trump signed four executive orders that could create one of the biggest energy, nuclear energy investment opportunities that we've had in decades. We're talking about a plan that he unfolded to quadruple America's nuclear capacity by 2050 and streamline regulations that have been strangling this industry for years. Now, most investors, people like us, we're kind of on this, but other investors out there, they've not been tapped into this, all right? They might be missing the fact that this nuclear revolution has actually been happening for a few years now, kind of ramping up. Now, hopefully I can break this down and kind of explain it a little bit, show you why nuclear power, you know, was kind of the only solution. Goose and I have been talking about this for a little while. And now, America, we're facing this electricity crisis. All right, our grid's not been upgraded. We're not producing the power we need. Elon says we need solar. Maybe that's the end solution, but it's going to take time to ramp that up. Now, for 2 decades, our power consumption has kind of been flat, but thanks to AI data centers, well, all of a sudden we're consuming in one data center as much electricity as a small city. Add electric vehicle adoption, battery electric vehicles, and this thing is kind of, growing this demand. And then we're doing manufacturing reshoring that we've been offshoring for a long time. Now we're going to reshore. That creates more electric demand. So we could double electric demand over the next 2 decades or so. Solar and wind sound great, but they have a fundamental problem. Solar, you got to store it. All right. The sun only shines, at least for here in Knoxville, you only get about 5.5 hours a day average across the whole year. That's with cloud cover and smoke and haze and rainy days and winter days where it's shorter. It averages about 5.5 hours a day. Wind sounds great, but the wind doesn't blow sometimes, and you still, and sometimes it blows harder than you expect and burns up windmills. So I mean, there's problems. Now, the problem with nuclear, though, you need a base demand. It doesn't run up and down. Like you can't just scale it up and scale it down like you can like gas turbines or coal turbines. You need a base demand that runs 24/7 regardless of the weather. And that's where these AI data centers come in. They're going to be running all the time. And that's where Bitcoin mining solves this problem too. Now, nuclear plants have a capacity like 90%. I mean, they can run at 90% compared to solar that runs at like 25% or wind that runs at, the average across the country about 35%. And, nuclear doesn't really generate active waste. Now, we do have, nuclear waste, but there's ways to take care of that. We just haven't been doing that. All right. Other countries have refueling facilities that take what comes out of the reactors and reprocess it into usable fuel. And that's where Trump's executive orders really kind of made a difference here. Now, executive order number 1 was the Nuclear Regulatory Commission, NRC reform, and they have 18 months basically to get new reactors licensed. All right. And they have 1 year to review a renewal process. The current process without this executive order takes 5 to 10 years. So that's a huge improvement. And that's what I was talking about before, when you've heard me talk about this before, that, we just can't throw these things online. The review process, the regulatory process was taking 5 to 10 years. Now we're going to shave that down to 18 months for brand new facilities and 1 year for renewals. That's a huge, it's not just improvement, it's transformation in the process. Now, executive order number 2 covered DOE reactor testing reform. It creates a parallel pathway for testing new reactors outside of the traditional Nuclear Regulatory Commission licensing. So we've got to approve at least 3 pilot reactors with criticality by July 4th, 2026. So this lets a lot of innovative companies prove their tech works over the next year and a month, basically. Now, order number 3 that Trump signed was a national security integration that deploys nuclear reactors at military bases by 2028 and designates AI data centers at DOE sites as critical defense facilities and leverages national security to accelerate the deployment. This creates base demand and not just military base, creates that base demand I was talking about for that nuclear power to keep it running. Now, executive order number 4 creates the nuclear industrial base and addresses the entire fuel cycle and directs the State Department to pursue 20 new nuclear cooperation agreements globally. And this positions America. I've been talking about that problem with the refueling. Like, you to build fuel production facilities, you need customers. This executive order number 4 addresses that demand, creates these agreements with other countries to supply their nuclear fuel, which allows us to build out that infrastructure to create the fuel. These aren't just policy changes, they're massive, they create massive investment opportunities across the whole thing. Now, some of the ways you can benefit, we've got URA, that's ticker, Uniform Romeo Alpha. That's the Global X Uranium ETF, and that's one of the easiest entry points right here. And it holds 48 nuclear companies. Cameco is at 23% of the holding, giving you kind of diversified exposure to the whole thing. Now, Cameco, CCJ, the world's largest publicly traded uranium producing company, has high-grade Canadian mines and trades around, $60 or so. It's been up significantly lately, and it's positioned for uranium demand explosion, and they have a lot of exposure, 49% ownership in Westinghouse that actually produces some of the reactors and does the maintenance. Then you have Oklo, OKLO, it's one of the most exciting advanced nuclear plays, really, when you look at the technology. They've been up about 500% the past year. They're developing small modular reactors that can run on recycled fuel. That's back to that, using nuclear waste to power more nuclear energy moving forward. Now, recent partnerships with Korea Hydro and Nuclear Power also diversify this out to those partnership agreements we were talking about. You also have SMR, which is NuScale Power, the only small modular reactor company that actually has an NRC design approved right now. This is, Sierra Mike Romeo, NuScale Power. 2 approved designs, including their latest 77 megawatt, 77 megawatt, it was just, giant, but they're small in comparison to traditional nuclear plants that we, with the cooling towers and all that stuff. So this company is perfectly positioned for high volume licensing if we can actually get this thing broken loose. Then we have GE Vernova. GEV is the spinoff from GE. Their new 300 series reactor can be built in 24 to 36 months. So, that's pretty strong. But, they're not just in nuclear, though. They're diversified across wind and solar businesses, too. They have strong export potential as we ramp this up. So GE is going to be competing with Westinghouse in a more traditional type of nuclear reactor situation. Now, we also have some other companies like Vistra, VST, Victor, Sierra Tango. It's the largest U.S. power generator with significant nuclear assets right now. That's one that I haven't really talked about much. I didn't really know much about before right now. We have Talon Energy. We've seen that one show up on some of the daily scans, TLN, Tango Lima November. And it's a nuclear power company that has a partnership with AWS. That's Amazon Web Services data center, to try to work out a deal with Amazon. Then we have Centrus Energy LEU. It's the only company producing the HALEU fuel that's needed for some of these advanced reactors. Like I said, you've got to have the fuel, but you've got to have the customer, and they're kind of hand in hand. So it's kind of been a chicken and egg problem. You can't build the reactors without the fuel. You can't, start producing the fuel without having a customer. So hopefully this whole situation knocks this off dead center. There's some risks and stuff, and URA has that broad exposure, but, there are going to be legal challenges from environmental groups. The execution, like, are we going to be actually able to execute on this whole thing? These are some of the risks. Political risks, suppose something happens to the administration, or, we get a wind of change. A future administration could be anti-nuclear. Trump's only in office for, 3.5 more years or so. This could come to an end, So these things are exposure. We have timing. We have, a lot of execution's got to play into this to make it work. So the bottom line is that these do create a regulatory framework, but we've got to actually implement it. So this could be a true $1 trillion market moving forward, but we've got to actually execute on this whole thing. And we've got ETFs like URA, we've got companies like CCJ, Oklo, SMR, GEV, that stand to benefit, but we actually have to execute. And despite all the fundamental story and the narrative going on, there's risks. There's going to be pullbacks in these charts. They're going to move up. They're going to move down. And, that's kind of the way this all goes. All right. Hopefully you enjoyed that, deep dive into the executive orders that Trump put out. And we can move on forward to some more of our normal content. Like, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This presentation intended to be informational, educational, fun, and entertaining. Not a recommendation to be buying or selling any financial instrument, including stocks, options, bonds, forex, futures, cryptos, treasuries, stuff like Oklo, GEV, URA. I'm not recommending you buy any of them, but I wanted to highlight that, we've seen a lot of people talking about it, and I wanted to highlight kind of some of the benefits maybe that might be out there with those executive orders that just went through like a week ago. So it's a developing situation right now. As far as the calendar goes, the big information of the week, we got the was it the head this morning? The ADP job number, ADP non-farm employment change. Trump really railing on that this morning on social media, saying that Powell's late to the party. Only 37K. That came in pretty sour grapes there. We're going to get the normal monthly job reports here coming up on Friday. Non-farm employment change and unemployment rates right there. No, the jobs report, as they call it, coming out on Friday. We'll see. Did we have part-time jobs? Did we lose full-time jobs? Like it's been the trend for the last couple of years. But all that's fine and great. But how do we make money today, right? So look at the S&P. I did a big deep dive into this last night, explaining why. A few people have been having heartburn. We had a whole conversation in Discord yesterday about my warnings about the potential drop. Now, I went into the charts pretty in depth, spent almost 45 minutes breaking down this move up right here and how it ties in historically to what we've seen before. Right now, past performance not necessarily indicative of future results, but there's some structural price action here that gives me cause for concern. I do expect this to pull back. Whether it pulls back from where we are or from up here, I do expect this to do a substantial pullback on the order of 800 points on the S&P. Now, after we get that kind of, 600 to 800 point pullback, the structure of that pullback specifically is going to tell me whether I think higher probability to go higher or higher probability to get continuation lower. At this point, it's kind of a coin flip. Flipping of a coin right there. Like, are we going higher to all-time highs and keep on trucking on a pier potentially? Or are we crushing it down to that 4,000 or lower right now? If you haven't watched that, go watch the 30 minutes of awesome video. It's got the green banner on it and the live tab from last night. It'll be the one that's like how, if you go to my channel homepage, you can just pop over, show you which one it is. Let's see, Jeffrey. Ah, crap, missed. Hey, come on. Bump the mouse. There we go. Click on the live tab if you want to see the past live videos. This one right here from last night with the purple. That one right there. That's the one I'm talking about 14 hours ago. Should watch that. All right. Only 257 views so far. It's got some, like I said, I broke down for about 45 minutes. The exact reason, Elliott wave wise, why I think that we're kind of more bearish than we are bullish. All right. Moving on. S5TW, still hanging in the middle. S5FI, hanging at the top range. S5TH, hanging in the middle. Not providing much clarity. Now, S5TW did make the top, and S5TH, S5TI, FI, did hit the top. So both of these two have satisfied the requirements for the top and set up the potential for downside. This one, still longer term, probably going higher. That all fits in the bigger picture that I've been expecting. ES overnight, not providing much clarity. We dive in here. Still bullish though. We did that bounce yesterday. Ripped right up to the 1618. Beautiful extension. So that drop on the ADP number could be the top in place. We'll have to watch. All the normal things you watch, all the things I've been harping on lately. How do you know the reversal starting? Watch for the breakdown. Starts on the lower time frames and gets higher and higher and higher and higher. That's how we know. NQ, same kind of pattern. Looks like this S&P just opened. Trading day, open up. S&P popping up. We may need to hit that level right up there before we're done. Now I talked about this all the way back here. We have that low. We got that first move up. We got the correction. And that set this level right up in here that we may have to hit. Set these levels. Right now, we're banging on it. Like we hit it yesterday, and we're right there at it today. Do we need to push marginally higher to complete this little move? I don't know. We may need to hit 6,000 just psychologically, or get really close, which we're in the ballpark, 17 points lower, 16 points lower. Keep talking, be 15 points lower. We may need to get close to that 6,000 psychologically before we can do the correction. And it's possible, anything's possible, that we actually run this higher just because of the hype and then roll over. That right there scares me, but it is a potential. If we do that, the downside could be very vicious. Very vicious, because that sets up the pattern just like 2007, where we went down a lot. Like 57% correction is what came next. We did a 13%, we did a recovery, higher high, and then we did a 57% correction on the S&P. Think about that a minute. What would a 57% correction be from 6,200? We're talking about down at the low 3,000, if not in the 2,000s. That could be a pretty vicious correction. That's why I'm very concerned about this current price action. All right. If you feel like you missed out on the bull run, maybe you're just being overly conservative. All right. Some people calling this the biggest opportunity we've had in years. I would be careful going that far. Russell right here, not looking the most bullish. Still lower highs. Be very careful here. Be very careful here. On the daily chart, this still looks like it needs a retrace. We've got that lower high. We're making another lower high. We're all this price action under the roadmap line on the daily chart that usually gets, I mean, this is a dip, a retrace, holding lower, three-wave kind of fashion, can very easily rip lower quickly. CL, I was kind of outlining some of the bullish potential here, and we're seeing CTAs potentially going bullish in all scenarios. Can lead to that nice pop, roadmap line, maybe even something more bullish, more aggressive on the upside here for CL. I like it. Gold, potentially topping out here. Three-wave down, retrace that doesn't have a lot in it. Potential B-wave, we've been holding for about 3 days here, right in the vicinity. If we get some downward pressure, this could push it into the next leg down. Now, there's potential that maybe that three-wave retrace to here was it. We're done, finito, bandito. It was a 4-hour hit, and we're going higher. It's possible. I'm very cautious though. It's right at the 786 line. We've seen a lot of stuff push that 786 line before rolling over. Bitcoin has been kind of stuck right here, retesting that prior breakout. Came back, we've just been sitting on it, sitting on that 4-hour roadmap line. Usually I like to see this bounce if we're going to hit, bounce and go, not bounce and sit here. Demonstrates weakness, and we may come down to that daily roadmap line area. Be very careful on that one. ETH, similar, just grind for days now. Getting close to, starting to get close to a whole month. We've just been grinding here. Despite any kind of accumulation you might be looking at somewhere else, that gives me caution, especially when you pop over and look at the fact that Ethereum has no limit. All right, it's actually been inflationary recently, at least the last time I checked on it. We've been creating more Ethereum than we've been burning in transactions. So it's one to be careful of. NKD, this to me is my canary in the coal mine. We've made a move down, we made a retrace, lower high, that pushed that 786 level, like I keep talking about on gold and other assets. Made a move down, sitting right here, just above this 4-hour roadmap line. Another breakdown can push this down quite violently. And the test will be, do we hold the 618 or do we go for a lower low? There is very little chance that if we make a big, large down in this chart, that it does not pull the US market down with it. Dollar, well, there's a lot of dollar hate out there among hedge funds. Right now, we've been pushing down, and the trend would be to expect a lower low, at least than we made right back here in April. That's what I would expect. May was just a sideways consolidation, really, when you zoom out and look at the big picture. Just a little blip down here. Might push a little lower. Could push down to levels down here. That's been on the chart since we topped out back here in 22. Apple dumpling. What's crack-a-lackin'? Still consolidating, not really showing any kind of enthusiasm. We're seeing NVIDIA take over the number 2 spot yesterday. for Microsoft, but we go look at the NVIDIA chart. It's not at all-time highs. We go look at Microsoft chart. We're not at all-time highs. So we're just seeing some churn in these names. Now, Apple, first move down, still could get another leg down. This lower highs, higher lows, that's a watermelon seed squeeze. That could lead, we came down into that pattern, could lead to continuation lower. Just keeps adding up here. Amazon could be setting up something bullish, but it also could be a first leg down, second leg down. This matches across most of the Mag 7. Google has the same sort of pattern. First move down, potential for another move down. I quit going after it aggressively bullish because we stopped almost dead cold right here. Now, when we did this pullback on smoking hot earnings, I was like, that seems like we have some nice bullish potential. Once we got here at this 170, 180 area, I was like, I'm going to chill out on that because the potential for it set up this potential for a leg lower. Meta here has that same sort of potential despite pushing that 786 line. Keep talking about that. We keep pushing this. Now, I was pretty bullish on this all through this correction, and I still believe we could go rocking out. But it doesn't negate the fact that this setup is potentially on this chart. I'm staying a little bit away right now, especially at that high price. I don't have the resources just to go holding 100 shares of that willy-nilly in most of my accounts. Microsoft here already did this kind of echo of a pullback and probably going to go up higher, hit these targets 49, possibly 508. NVIDIA, I do caution here, this one has the potential to do a wicked pullback. Did push just past that 76. It's like we've seen on several other charts. Now, bullish case, it has the setup in place to get continuation right up here. Could it do that before it rolls over? Absolutely. 164 on the upside, but there is it's not lost on me that there is that same potential that we've seen on Apple, Amazon, Google, Meta. Now we've got it on NVIDIA, and we also have it on Tesla, the last of the Mag 7s. This is still present, that first move down and a potential for a next move down. Despite all the other things that might be going on with Tesla, if they can get the Cybercabs on the road and it's actually a success and it, paradigm shift, whatever, it's still on the chart. Until we negate that, still a risk. Still very cautious here. I would find support at the 300 level right now, but it's a thing. It's right there on the chart. Now, looking at the gainers for the day, I go pull everything moving $2 more up. We put it on the gainers list, look for opportunities. Look at everything moving down $2 more and put it on the decliners list. We check those out for opportunities. Look at GWRE is that blasted off. Like that did the pullback, double bounce, and shot right up. Target zone, baby. I'd be looking for an exit, not for continuation at this point. That is a 1, 2, 3, 4, 5 potential done. Now, the CRWD yesterday, we were talking about this in my Termite Trading Lab VIP group. This one, everybody's like, what do you expect to happen on earnings? I was like, well, we did this pullback right here. We did this expansion. We hit the target yesterday, right on the money. We have a potential 1, 2, 3, 4, 5 in place. I expected it to, I was like, a pullback's what I expect. Now, the pullback retest the breakouts could lead to upside expansion. We could go on up 513, possibly even this bigger target up here. I bet 590, 580, 590, 600, 660. We could hold this and go higher. But historically, just based on this pattern that I've watched over and over and over, once we hit that 1448, the likelihood we come back gets pretty high. We were 75% likely to hit that. We're 70% likely to go on and hit the 1272. we drop down to about 35% likely to go rocking and rolling all the way up here. What does that mean? It means that there's a high likelihood that even if we got a little bit higher, we're coming back down before we can go on up higher. That is on the decliners list, so be careful. SBET, this is doing that bubble pattern thing. Like we've got that, we shot up here, we're getting some chop. When it breaks down, it's going to be vicious. MCTR, another one that's going on a hype run. Core weave, going on the hype run. You know, this is still 35%. Drops down to 20%, getting below 20%. Dropping on down like 15, less than 5, less than 1 by the time we get up here. So less than, you know, if this is going to go absolute bananas, nutso, cuckoo, I'd probably believe it more on the log scale, 243. And we're already up in this ridiculous range here. Can it keep going? It's possible. Is it likely to come back down violently? Probably. Just seen that happen too many times. Light. Potential for this to get above this consolidation here. Got this consolidation right there that we did before that pop. And, you know, if you just believe in this, hey, we set up the entry right there. This can rally right up there. 117 would be the target. We do have that resistance. That is that 786. And it could pull back. So just a matter of how long you want to be in that. This could take 220 days to play out. It has the setup to go on up 117. GTLS. Choppy sideways hot mess. Gosh. 4 years of sideways. Nothing says to me that's going anywhere for now. I'd be very careful getting involved in that one. Thor Industries popping up to the roadmap line and kind of finding some resistance. That could be a roadmap bounce from below. We could get extension lower. Be very careful here. First move down, retrace. Next move down could have a little bit more to go. Right down in there. Snow. Finding a little resistance at that 1448. Popping on up 220, 221. My bigger target up there around 260. I'll consider maybe taking some risk off. Beautiful move so far. Koru, Korean 3X bull. Potential to make a potentially made a bottom here. Is a reverse split. So they can maintain that leverage. Korea got kind of beat down here. NXPI bounced off the roadmap line, trying to get some bullish action going. Just not looking very strong right now. ALV. Got to pull up the US version. Auto Live. Got that high. Got this low. Need to close above that 618 to produce the opportunity to go on up to 138. LEU at the target. Watch for the... That's back to that one of those ones I was talking about right there. They produce the fuel. We're at the target. Be careful. Oklo. Still 67.50 upside. GEV. We're at the target. CCJ. We've got the potential to going up just a little bit higher. 67.90. So these look like they're getting near a played out zone and may take a little rest after all the hype from those executive orders. KWM. Dangerous chart. Hood coming on up. Got the all-time high, possibly at 85. We may find some resistance. And we're kind of slowing down a little bit today. May pull back, do this before we can pop up in there. We're getting to targets. And the opportunity to get in was down here at 50. Now you're up 50%. Be careful. Protect your profit. TSM has the potential to go on up to 245. Doesn't negate getting a pullback. DEO still working on the downside here despite being on the bullish list today. BAOS. I just wouldn't touch that right there. STM. Nice little push above. RLBN. Huh. I knew Hood X. Here's another Robin Hood 2X leverage. I didn't actually know this one. And we are now Robin Hood's at, kind of a higher high than it was a few weeks ago, but that 2X leverage here at a lower high. We see that, so it's going to have to make a substantial move on higher. Hood X here pushing on higher. So out of Robin and Hood X is outperforming. FLS grinding here and likely till we can bust up and get above like that, make higher highs. This situation looks like we may get a retrace, very similar to all that Mag 7 stuff. If we hold this area, we can go higher. If we break down, just like the S&P, could go lower. CRWD we talked about. CEG, potential going up to 393. That's a 2X leverage on CrowdStrike, getting whacked. QBTX, it's a 2X leverage on QBTS. Be careful on those leverages. MRUS, probably going on up to 67. Dollar Tree getting whacked a little bit on earnings, but not really hurt. It may retrace to the roadmap line. I am quite bullish on this chart. I did expect a reaction at the gap fill, and that's exactly what we're getting here. You say, oh no, that drops because of the earnings. Well, sure does look like, sure is a coincidence. We just happen to be at the gap. If we can get through that gap zone, the upside potential sky high on Dollar Tree right now. Same for DG. DG has a pretty sky high upside potential. ASAN. Just chopping here at the bottom, not really indicating anything. Then my signature setup for today. Yeah, we'd be very careful on this one. Picked up some downtrending, low price stuff. Does pick that up occasionally. That little bitty pattern there, I'd probably avoid this. In all honesty, the number's just not great. The downtrend, marginal setup, I'd probably look for a stronger reversal based on the bigger pattern, and that still would need higher high price action, which we haven't done any of. Be very careful here. As you can see, though, it doesn't negate that it worked. This was a downtrend, and it didn't negate that one working out. But I'd be very cautious here. It's just not where I want to put my money at risk. I'm looking for the best of the best setups, not just some marginal junk that I want to get involved in. So probably not hunting for any kind of opportunity on that one today. As far as what I expect to happen today, looks like we're going to push on up. Potential to get that last little extension here. Maybe. Although we could be done. We've satisfied we've brought this one and this one back into agreement. They now are aligned. We have the conditions set for the bigger pullback than we had just a few days back. Got to be careful. Like, if something starts flushing big, it might be time. Like, this is not a time to be hunting all-in longs. This would be a time for hunting profits and looking for those good opportunities that are already pulled back. You might be, well, what kind of things we're doing pullbacks recently. You have stuff like this that bounced off the roadmap line right here. Bounced off, bounced off, bounced off. Now we're working on upside targets. That's the kind of opportunities. Like stuff like DLTR. It's probably going to pull back maybe to the roadmap line, but that's more opportunity. This is already kind of near the bottom. It's not ramped up. Hasn't made this big recovery. This one has opportunity to potentially start running. DG has that opportunity to potentially start running. The nuclear energy stuff potentially has a lot of opportunity to pull back. Some of it has just a little bit more to go to the upside. So you've got to, when I tell you to be careful, it's don't chase stuff that's already, don't start hunting longs on stuff that's already at the targets. Like this one, this is not the time to hunt for a new entry. It's not even the time to sell puts because of the downside risk to come back to the roadmap line. When I'd say be careful, I'm talking about stuff like this and all the Mag 7s. Do you want to hold? Do you want to get Apple now? Buy calls, buy whatever, sell puts, get put stock at 200 when it might drop down here to 136? Do you want to buy Amazon at 200 when it might drop all the way down here to 140? Do you want to buy Google right here at 167 when it has the potential set up in the chart to drop to 120? Do we want to buy Meta right now at 680 when we could potentially drop back down to 440? Microsoft, you missed your chance. Like the chance to buy in was down here. You're like, well, I wanted to wait for it to prove it. That was still right here at 426. Now that we're at 465, we're closer to that 489 target than we are. And we could see a large pullback while everything else pulled back, retest the roadmap line area before we go on higher. NVIDIA also, like, do you want to buy it now for that small, relatively small upside potential? Down here, we knew we were going to pop into here. Here was ambiguous. I probably would have, in fact, I did take risk off of NVIDIA that I had. Not really sad about this. Still very dangerous potential. I play little pop shots in here when it presents opportunity. Big risk, smaller reward. It's all about risk reward. Tesla, I'm kind of invested in the narrative that we're going to have a paradigm shift. I'm still long Tesla. Does that negate the fact that we might retrace this support? No, if you're getting in now, you got to be willing to hold to this. And you got to be aware that there is that bigger downside risk. If you're getting in now at 336, I'm actually selling puts down here. If you're getting in now at 336, you got to be aware that this chart might go back to 100. Upside, nothing's given, all right? Charts can do whatever they want to do, despite any kind of narrative, any kind of anything going on in the world. It's kind of crazy that way. We saw that with BA. Everybody was bullish, just crazy bullish on BA. I was warning that we're probably about to experience a large pullback on BA. Probably going to basically cut this thing in half, and that's just about what we did. Did a pretty quick drop. I thought that might have been the bottom. We continued to push it on down and then retested to make sure that was the bottom. Now we're starting to rip. I do expect a pullback, but it could just keep ripping. Very well could be on the path to 600. Maybe even something much, much higher. And watch out buying at the tops. And a lot of people are having heartburn picking this up. All the news, the mainstream media is so bearish, but it looked like we were about to take a turn. The mainstream media news is usually super bearish for about 6 months, up to 6 months after a chart bottoms. You've got to be willing to, as Warren Buffett says, buy when others are being fearful. So I'll see you again tomorrow. Let's kind of wrap it up here today. Be careful out there. The count you save may be your own. Nobody's watching out for your money more than you are. And if you're trusting somebody else to watch out for it for you, you're not doing as good as you could be. Have a great day, everybody. We'll see you again soon.